Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Man, Gino Barbaro. Gino, how's it going?
I'm doing good. How you doing, J-Love?
Always making it happen. Today's guest is Seth Williams. Seth is an experienced land investor and residential income property owner with a decade of experience in the commercial banking industry. He is also the founder of retipster.com, a real estate investing blog that offers real-world guidance for part-time real estate investors. Today, we are stepping outside of our comfort zone, going into the danger zone, and jumping all in for some land education. Yes, that was a Top Gun reference. Gino, I'm a little nervous.
Add me to the list, my friend.
You ready for this?
I was born ready. Let's do it.
Seth is about to school us. So without further ado, Seth, welcome to the show.
Hey guys, thanks for having me. Glad to be here.
Hey, happy to have you here. So let's jump right in. Why don't you tell us a little bit about your background and how you got into real estate?
Yeah, sure. Well, I got into real estate probably the same way a lot of people do. I first picked up on real estate as a viable option for my future when I was reading Rich Dad Poor Dad back when I was in college, and I was going through that book and. It just, he started talking about houses and rental properties and all this. And it's like, that sounds kind of cool. And so this was about like 2005-ish when it started occurring to me that was an option. And as I was reading this stuff, I started looking for like deals in my area. I was looking at the MLS listings, trying to find, okay, I got to buy a house and I got to rent it out. And how do I do that? And, as I was finding houses and running the numbers, like just nothing seemed to work. Like I couldn't find deals. And no matter what I did, like even if I were to offer somebody way below their asking price, like the numbers didn't even come close. And I was just like, man, how do people do this? Like if I can't find deals, like how does this happen? And granted, this was like at the height of the market when things were, as expensive as they've ever been. But it still just wasn't making sense to me. And I knew there were people out there doing it. I just wasn't seeing how it was possible. And what I eventually learned was that I was looking where everybody else was looking. And I was basically not contacting the right people and finding the right opportunities. And eventually what I found through, a number of different sources was there is this thing called a delinquent tax list that every county in the country has. And the list is basically every single person in that county that is currently delinquent on their property taxes. And so what I did was I found out how to get this list and send out a direct mail campaign to all of these people. And it turns out it's actually a very, very valuable list because when people have delinquent taxes, it usually means one or a few things. It means, they don't want their property or they don't care about their property or they can't afford their property. For one reason or another, it's not a good fit and they don't want it and it's a problem and they want it gone. And so through this direct mail process, I found that a lot of these properties are vacant land. And the reason they're vacant land is because, a lot of houses out there have mortgages on them, which means they also have like escrow accounts, which keep the property taxes paid current. So just by the nature of delinquent taxes, a lot of houses don't even get on this list. It's just land. And so through this process, I was able to get a lot of vacant land properties for like pennies on the dollar. Like we're talking a few $100 to buy a piece of vacant land. And when you get properties for that cheap, it creates just this huge profit margin. And you can turn around and sell them for really just a slight markup even and make some pretty good money on it. And I've just found land to be a really, really awesome investment technique just because land is a very simple animal. I mean, it's especially when you can buy it with no financing, just with the cash in your pocket. It's just, there's a lot of junk in the process that's just wiped out. And it's really just a numbers game. And when it's just dirt, there's just very little that can go wrong with that. So that's really what I've been doing for the past about 8-ish years now. And I've just found it to be a really nice little niche.
Seth, can you outline what markets you target and basically just chunk down your strategy on how you find these deals and how you sell these deals?
Yeah, sure. Well, when I first got started, I was pretty much only pursuing the properties that were in my state, in Michigan. Mm-hmm. And basically my assumption, or just kind of, I don't know, the way I thought about things was that the only thing I could really do were properties like right in my backyard, like properties that I could drive to and see myself. And if I couldn't drive to it, I wasn't going to do it. And I mean, it still worked. I mean, there's opportunities everywhere, so it still wasn't hard to find deals. But keep in mind, when I was doing this, when I was getting into it, it was like right at the beginning of the huge 5-year recession we went through. And I mean, it was like just really a terrible time to buy and sell real estate in Michigan specifically, and vacant land specifically. Mm-hmm. But even then, I was still able to do pretty well at it. And it kind of just occurred to me, like, what if I was doing this with larger properties in better markets where, you know, maybe they were really good deals, I just couldn't necessarily see them. And so nowadays, actually, the way I'm doing this is I'm actually buying and selling very few properties in Michigan. It's more all over the country, places like, you know, California and Alabama. I've even had leads in Hudson County, New Jersey, probably not far from you guys.
Nope.
And it's I mean, that's one of the nice things about land is that, I mean, you don't have to get into a property or to see anything. You can just look at it from the road for the most part. And that's really all you're going to need to know is just, does it look like what I thought it was going to look like? I mean, has somebody dumped a bunch of trash all over this property, or is it just clean? I mean, that's
what I was getting at. What's your due diligence like? What are you doing for due diligence on these?
Yep. It depends on like where the property is located. Like, for example, in my state, one issue that you would probably want to look into is, does the property pass a Perc test? And a Perc test just means, actually, I should back up. It needs to either pass a Perc test or it needs to have access to a city sewer. Mm-hmm. And a Perc test is where they dig a hole in the dirt and then they pour water into it and then time how long it takes for that water to drain through the soil. And the reason that's important is because water needs to be able to drain through the soil in order to put a septic tank on that property. Right. Because if you can't put a septic tank on it, you can't build anything, which means the value of that property goes way down. So that's one thing you look at. Another thing would be like, is the property in a flood zone? Is the property, like, what utilities are available to it? Essentially just trying to understand, like, if you buy this lot, what can be done with it? I mean, is it vacant because literally nobody can do anything with it, or is it vacant just because nobody has gotten to it yet, or nobody's thought to do anything with it yet? And it's as long as you can understand, you know, the highest and best use for a property given its, you know, attributes and location, that's really the main thing you need to know.
You know what's cool about your strategy? It's just like every other real estate strategy. What you're doing is you're trying to find motivated sellers and you're trying to create value on a property, on the deal. So, I mean, it's really weird. You do land. Some people fix and flip. Some people buy and hold. Basically, we're all out there trying to find those motivated sellers and trying to create value on that property, which is really interesting. I never thought of it that way, you know? Yeah,
it's and that's actually one of the really cool things about land is that most people aren't thinking land. Like, it's actually like I literally, like, no joke, I have never encountered a single competitor a single time doing this. Like, when I send offers to people, it's just me. I'm pretty much their only option. And if they don't want to work with me, they're not going to sell it. And it's knowing what it was like to try to make offers on houses like that. I mean, just different universe, you know, like there were times when I would make offers on houses above their asking price, and other people were still getting the deals ahead of me. And just coming from that, going to land where there's zero competition was like such a breath of fresh air to me.
That's great.
That's great. That's what we look at also. When people are buying duplexes and triplexes, there's so much competition in that price point. And when you're buying deals, 50, 60, 70 units, 100 units, there's less competition. So what happens is prices, you can get a deal and, you know, you can get it at wholesale. So I love that. I love that point that you made. It makes so much sense to me. Where did you get your education? How did you start doing this? I mean, did you start coaching? Did you start picking up books and reading?
Yeah, I learned of a few people who were doing different variations on it. The first real person that I heard about doing it, his name was Jack Bosch, and it was back in 2008, I think, was when he started, releasing courses on it and that kind of thing. And it was just, I mean, that was the first, like, I guess, gateway, just in terms of understanding the whole land concept with delinquent taxes. And I mean, there's probably a few things I still kind of follow, but in a lot of ways, I've kind of just tweaked the ways that I do things. I like one thing that has like seriously automated the way that I do stuff is by setting up a website, and that's really where the bulk of my leads come from today. Is just people finding me on the internet and submitting their properties to me, and that's part of why I buy properties all over the country now, not just in my state, because the leads are coming from everywhere. But there's a number of other guys out there who are doing similar education courses and that kind of thing on the same, basic concept. So it's a known thing out there. It's just, I think a lot of people, when they hear the words land, they're like, okay, whatever, I'm not doing that. It just doesn't make sense. And they just kind of walk away. Yeah. It's like another thing with land that a lot of people don't seem to understand when they hear it is, they hear land and they think, well, that doesn't cash flow. That doesn't produce, an ongoing stream of income. But it can if you buy these things for like pennies on the dollar and then sell them with seller financing, because then like the down payment and or the first few payments you get will completely pay off your entire investment in the property. And then for the next 5 or 10 years or however long it goes, all those payments are like pure profit. So it kind of is like a rental property. The only difference is that it does have an end date after that term is done and it's paid off.
That's just depends how you structure it, right?
Yeah, exactly.
Well, Seth, you know what the problem is up here in the Northeast? Land 30 years ago, people who got really wealthy off land, they would land bank. In where I live, they'd buy a piece of property for $50,000, and 2 years later it was worth 75 or 80. And now land prices here, in the tri-state area where I live, are just astronomical. So when people think about land, they think about that kind of land and say, "Wow, I can't buy that." The taxes on the land itself are like $4,000 or $5,000 a year on just raw land. So you can see how it doesn't work in that kind of strategy, but your kind of strategy makes total sense to me. I'm looking at it from that perspective. You just changed my paradigm shift on land. That's awesome. What changes have you seen in the field since you started about 10 years ago?
Yeah, I would say the main change is when I got started, specifically in the market I was working in, it was, from time to time it would be kind of challenging to get properties sold. Like you just kind of sit on them for a little while. And I'd say it's probably gotten a little easier to sell them, just because at least in the places I work, the building market seems to have picked up, and people have a desire to build where they weren't before. In terms of finding deals, I don't really think it's gotten any harder, and I think it's because, like, regardless of where the economy goes and the markets go and all that, there's always going to be this segment of society where there's just people who just don't care, and it doesn't matter what the world is doing. They just don't want their property, and it's just a matter of finding them and giving them an easy button and just saying, here, money is not your concern. You just want this hassle out of your life. I'll take it from you. And it's a matter of just finding those people and meeting them where they are and just allowing them to do that. So really, in terms of finding deals, that hasn't really changed. Those are kind of the main changes I've seen. It really hasn't been a lot of wild shifting, from one side to the other.
Let me ask you, how do you finance these deals? Do you go all cash? I mean, how do you get money to raise to buy these properties?
Well, I mean, I'd say, especially in the first couple of years, a lot of the properties I was buying were what I call, rinky-dink properties, just like, they were probably worth $5,000 to $10,000, and I was buying them for, $100 to $500 a piece. And so with that kind of money, I mean, I only had a few $1,000s to my name when I started doing this, and I could buy my first properties just with the cash in my pocket. So really, loans have never been a thing.
Low barrier to entry.
Yeah. And that was actually one of the big things that appealed to me about it, was that, I had looked at, flipping houses and doing all this stuff, and just like the risk and the financing and it was just, especially for my wife, who's very, very frugal and good with money. She's actually an accountant by trade. She just could not get comfortable with me doing this. And I get it. I mean, looking back on it, I'm really glad she wasn't, because I probably would have done something really stupid. But
there's real risk there for sure.
Absolutely, there is. And with land, it was just like there are no improvements to make. I mean, there is no financing. Like even if everything goes horribly wrong and I lose $500, it's like that's not going to crush me. I can survive that. And that was really what gave us a lot of comfort.
Seth, you know what we call those kinds of properties? Jake and I have termed the phrase mom and pop apartments. It sounds like you started out with mom and pop properties. I would say there's deferred maintenance, which you would say there's nothing on the property. There's just a motivated seller, whether they're going through a divorce, they just don't care. I mean, it's just weird how our strategy is with multifamily apartments and yours is with land. And it's just the same kind of mindset. It's just trying to find something that somebody doesn't want, that they don't see value in, and that you totally see value in. And you're buying it at 30 to 40 cents on the dollar. We're not buying it at that kind of a discount, but I mean, you're buying them at such huge discounts. That's so cool. That is really awesome.
Yeah.
What size are we talking? Like what's the biggest land deal you've got into? Like 20 acres, 40 acres? What are we talking size of these properties?
Yeah, that's a good question. I would say most of the properties I get are like not that big. I'd say they're like relatively small, like 1 acre residential buildable lots, that kind of thing. There's a lot of subdivisions in the country where they built all the infrastructure, they put all the roads in, but like the people never came, and so they just kind of sat there crumbling, and all these lots are plotted out, but nobody's ever used them. And those kind of properties there's just a lot of opportunities like that. I mean, so there's that segment, and then there's also properties like 10, 15, 20 acre properties that are out there. I've gotten a number of those too, but usually they're not over 20 acres. And I think there are plenty of opportunities like that out there, but once you get higher than that, it starts getting into the realm of like farmland and that kind of thing. Mm-hmm. And the difference with farmland when you hit that is that the value of those properties are relatively fixed. They're actually like usable for like a source of income that people can lease out and that kind of thing. And people start getting wise to the fact, like to the value of a property when it gets that big. And they're not willing to just throw it away for nothing. So that's why most of the properties are kind of below that range.
Seth, do you have to go to the town ever and try to change the zoning of a property to create value, or try to get permits or approvals to build something on a piece of raw land?
That is something I could do, but I've just never chosen to do that. It's kind of I think there was one time when I had a property that was right on the side of a highway, and I wanted to try to get it zoned to commercial so I could put a billboard there. Mm-hmm. And I had looked into it a little bit, and it turned out like other people had tried to do that in the past, and it was just like, no, just don't even go there. It's one of those things where I'm sure that those opportunities are out there. I've just kind of chosen to selectively ignore that whole thing. So I've never really done that. I just kind of buy them as they are and don't mess with them very much and resell them to somebody who's willing to pay closer to market value for it.
That's a great strategy because you get a lot involved with the towns. It can cost you a lot of money. It can cost you a lot of time.
Yeah.
Actual fees and all that. It can be really prohibitively expensive once you start doing that.
Yeah.
I agree with you.
Sounds like more work than you need to do because your strategy's working. So why get all tangled up in that crap?
Yeah. It's kind of like, I mean, I'm sure you guys could probably say the same in your with apartment buildings. Like, there's probably something out there that's being missed, but it's like you could say that about anything. Like, there's an infinite number of variables that could be changed, and who knows? Maybe you could make more here, but you just kind of you choose what you're good at, and you just kind of ignore the rest.
Yeah.
Mm-hmm. What social media right now are you using to get these deals, to promote yourself, and how are you using it?
Yeah, I'd say I'm using Facebook, Twitter, Google Plus, LinkedIn. In terms of like the actual land part of the business, Pinterest and Instagram, I haven't really gotten into those very much yet, mainly because I'm just not quite sure how they would work for promoting properties. There's probably a way, I haven't figured it out yet. But it's it's kind of all the majors out there that you've heard of.
What is best real estate investing advice you can give, or tip you can give to our listeners?
I would say, I actually read this in a book the other day. There's a book I was reading called The Narrow Road. And this author, it's basically a book about like kind of a ruthless guide to how to make money, like just no holds barred. This is what you have to do. And what he was saying is that entrepreneurs who really make it in the world are tenacious. Like they just keep going. Like you can't really stop them. They're just going to keep moving and keep trying things. And they don't get, put off or defeated by little, missteps or things that go wrong. They just kind of keep going. And when I read that, I was like, yeah, that makes sense. Because that's kind of how I work too. I mean, I've certainly, and I'm sure you guys could say the same about your business, like, especially in the beginning, you come across these obstacles or things just go like horribly wrong that you weren't even thinking about. And it kind of like crushes your spirit in a way, but it's like, you just got to keep going. Like, you just got to pick yourself up and keep trying things and take it as a lesson, not a defeat. And it's failure is only really a failure if you just sort of give up and stop. But as long as you just kind of keep moving, I think you can chalk it up to a lesson learned. And that's kind of how I've tried to do things. And I think when I look at people who, ask me questions and try to figure things out, the people that I see who are really succeeding and doing really, really well at this are those who they just kind of know how to take the reins and take control and just figure things out and not let themselves get crushed by the little things that go wrong. They almost kind of expect that. So when it happens, it's like, okay, whatever, let's keep moving. So I would say, just be tenacious.
Yeah. What's interesting about that? I've heard from angel investors before that they look for people that basically don't care if they're going to give them the money or not, because the train's leaving the station with or without their money, because they're going to get it from somewhere. So it's that same type of mentality. I love that.
Absolutely.
And I think it's ironic that Seth's reading a book called Narrow Road. I guess your subconscious was working in land and road. I thought that was pretty interesting.
Yeah, going against the grain, no competition. It's smart.
Yeah, I love that.
Yeah.
Let me dovetail into this then. I figure I can see what your habit is. What do you consider your best habit for success being?
I would say I just sort of keep moving. Like I don't like to just sit around and just like not do stuff. Like, it actually kind of drives my wife crazy sometimes, because like something that she really loves, her love language really is just quality time, like us just kind of hanging out and just sort of like sitting there in the same room. And that almost kind of like drives me crazy sometimes, because I feel like, no, I got to do something. I got to keep going.
Let's watch Netflix, honey.
And so it's almost like it's hard for me to like turn it off and just like stop working on stuff, because work, especially when I'm doing work that I love, it's almost like play to me. Like, I just really, really have fun with it.
Oh, yeah.
And it's, man, I got to tell you, it's such a gift to find that. Just find the things that aren't even really work to you. And I would say just the habit of just continuing to just move, and when, kind of like the previous point, if stuff goes wrong, it's like, just keep moving, just keep trying stuff, just keep figuring out your groove. And I've just found that to be a common habit with a lot of people who do well in life, is they just try stuff until they find what works. They don't spend all day just trying to like learn and learn and learn and learn. They just sort of, at some point you just get started and start finding out where the boundaries are and where you can actually do well in life.
That's really cool. To me, you've defined the definition of an entrepreneur, because you're the kind of guy who's got to make his own paycheck. You probably haven't gotten a paycheck from somebody in the last 10 years. So, you have to create that. And that takes a lot of energy, a lot of time. And if you enjoy doing that, I mean, you just hit a home run. Your life is going to be so much more fulfilling. And that's just awesome. Yeah. That's the definition, I think, of an entrepreneur.
Yeah, for sure. I'd agree.
What do you think your biggest mistake is in business? I mean, now that you're going, we must have a lot of mistakes, because all entrepreneurs who are successful like you have big mistakes.
Yeah, I would say, I mean, just being totally honest, a mistake that I'm probably continuing to make to this day is not delegating enough. And I actually heard you guys talking about it in I think it was your second pillar podcast about property management. And I've got a couple duplexes, and from day one, I had a property manager handling that. So, and that's actually like, I feel like that's like the smartest thing I ever did, because if I would have started managing it from day one, I think it would have been hard for me to let go of that, just the way my brain works. And I know of other people who, have chosen to manage it themselves, and it's kind of driving them crazy, because it's just too much work. And given all the other stuff they're trying to do in life, and I tell them to find a good property manager, and they just like, they can't let go. And so anyway, I've got that part covered, but more like in my land business and in the blog that I run, and there's just like a lot of stuff to do, and I have a really hard time letting go of that and trusting other people to take the reins and not screw it up. And I need to let go of that a little bit, and it is very difficult. I think that's something. It's going to be one of my goals for this year anyway. Is trying to at least find a few time wasters and just outsource them. So
Jake likes to call that the I'm a mentality. Jake, you want to define the I'm a mentality?
Nah, it's just, we talk about it a lot. I'm gonna do this. I'm gonna do that. I'm gonna do everything, and that's how we started out with the I'm a mentality. But here's the thing you'll find though. Even with us, we had I was doing a lot of the bookkeeping in the beginning. Gino was doing some of it, and it was very time consuming. And after a while, I found out, what, I'm not that good at this. And the bookkeeper that we hired with a CPA firm was a lot better at it than I was. So even though I didn't want to let go of it, it actually helped out quite a bit.
Yeah, I believe that. Yeah, it's hard to I don't know. There's just something like one thing, for example, like with my blog, I get like just tons of emails every day. Like it is so time consuming because I want to get back to everybody. I don't want to leave anybody hanging, but it just chews up so much time. And I like trusting somebody with my email is like a big deal. Like trying to figure out, I don't know how I'm going to do that, but I feel like I have to at some point because it just can't keep going.
You got to find the right person.
Virtual assistant. That's what you got to start looking for. You got to start looking for a virtual assistant who can actually start doing some of that work for you. I really think it comes down to a paradigm shift, a shift in your thinking. Because basically, when you have these duplex and triplexes, you're a landlord, which is fine. There's nothing wrong with being a landlord. I've been a landlord for the last, first 10 or 12 years of my career. If you want to start growing your business, there comes a point in time where you have to say, I have to let go of something. I have to grow the business. I have to grow my assets. I want to create more wealth. I want to generate more passive income. I have to start doing that. So I have to start becoming an investor, and you have to start thinking of your properties, not as houses, but as assets. And you have to start thinking of yourself as an asset manager. I mean, that's where we all get hung up. We think we're out there with properties and with land. You basically have an asset. You're trying to manage that asset and let people help you with the system. That's what I think a lot of us get hung up on. And the guys who become truly wealthy, they get that early on, and they start delegating. And it's all about team building. You have to build the right team. I mean, and if you can't build the proper team, you're not going to be able to grow. You're only as strong as your weakest link on your team, basically. So you better make sure that you've got strong team members once you take this upon yourself.
Yeah. Oh, well said. I totally agree with that.
You were talking about The Narrow Road in your book. What is your favorite book that you've read?
Man, there's quite a few of them out there. I think one that it just kind of sticks out in my mind. I don't know that it's like the best one I've ever read, but it was very good. It was How to Win Friends and Influence People by Dale Carnegie.
Yeah,
classic.
Yeah, just a nice, fun, easy read, and just tons of incredibly great, wise, sage advice in there.
Be quiet and listen, right?
Yeah. Yeah, it was a great book, and it's one I've read a few times, and I always get a really good vibe from that one. So.
You had mentioned Rich Dad, Poor Dad. I just want to give kudos out to that book. It doesn't give you any meat. It doesn't give you any strategy per se, but a lot of people hate on it. But I think the people who become successful just take that book for what it is and just have them that whole. I was just talking about that mind shift. You become an investor. You become somebody who looks at a house as not an asset but a liability, and as something is putting an asset put cash into your pocket, and a liability takes money out of your pocket. It's just that it really is that simple. So I think that book is tremendous. I'm glad you referenced that before, because you go on Bigger Pockets and a lot of these websites, they talk about Rich Dad. Some people love the book and some people just rip it apart. And I think you just have to take the book at its face value for what it is.
Yeah, I got to give that book a lot of credit, just because, like, if I'd never encountered that, I don't know that I ever would have even considered the entrepreneurial path. Like, I kind of just figured, well, what you have to do in life is just get the best job you can and hope for a good paycheck, and do that until you're 60 and then die after that. So just like the whole idea of like, you don't have to live life in that box. Like, there is a totally different universe out there that you can thrive in. And yeah, it's great at opening your mind and helping you to see things the way they really are. So. But
what's cool about that is you're the kind of guy, and Jake and I are the kind of guys that we can read the book. We won't get insulted. We won't get offended. We'll take it and we'll say, that's a great advice. Some people get insulted by like, oh, you need to have a great job. You need to do this. That's the author's opinion. I think he's got a valid opinion. And I think the people who act upon that are the true entrepreneurs and get it,
Yeah, so for sure.
That's why I give that book so much credit,
Definitely.
Let me ask you, what is the best deal you've done so far, you think, and why?
Yeah, well, one deal that I reference a lot. It's just it was a really fun deal, and it was I don't know. It just it was cool because it was a 12-acre vacant lot up near like northern Michigan, right on Lake Huron, with like 500 feet of beach frontage.
Oh wow!
And I got that one for $4,500, and and then I sold it a few months later for $45,000.
Oh, that was party time! Come on, man.
Yeah, and that was. I've hit other deals or several other deals that were like similar in that dollar range, but that one was just really cool to me because it was like the first huge one I did. And when I saw that, and granted, when I sold this thing, it was in like 2011, and it was like the worst the market had ever been in Michigan at the in a location that like that part of the state was not really thriving. But just the property itself was awesome. And if I would have like held out for 5 years, I probably could have gotten like $300,000 out of that thing. But it just goes to show like that's the kind of stuff that's out there. And if you're looking for it, like you will come across it. It's just a matter of time. There was another deal in Hudson County, New Jersey. Actually, it was a little. It wasn't a huge property, but it's Hudson County, New Jersey. It's like we're talking like the hotbed of real estate and just value. And this property was worth probably like $500,000, and I got it under contract for $27,000. Nice. And the problem was though the seller he knew he was losing his shirt on it, and after he signed the contract and sent it to us, he found another buyer and ended up selling it to that person for $100,000. So we ended up losing it. Long story short, but
what'd you do? What'd you do? You were under contract. Did you pursue him, or did you just let it go?
We let it go because it was there was no deposit involved. There was nothing like that. We weren't. It's kind of a loose contract the way it's written, and it's sort of designed that way because a lot of these people are just selling for ridiculous low prices, and I'm not gonna hold them to that. But it was just an illustration to me of like, man, like that kind of stuff is out there. Like there are people who like, they understand what their property is worth and they don't care and they're willing to sell it for a lot less.
Moral of the story, get a quick close, knock it out before you lose it, right?
Absolutely. But yeah, I've come across other ones. That was probably the highest profit margin one I've ever seen, which didn't even work out, but there's tons of that kind of thing where it's just like unbelievable profit margins, all for dirt that you don't even have to do anything to. So,
Seth, would you have gone higher on the property? On the price, seeing that he sold it for $100,000, would you have said, "Okay, listen, I'll go higher"?
I think it would have. At that point, my only issue was just access to immediate cash. So like I probably could have gone as high as like $50,000, just being able to like afford it myself. But yeah, it was. Obviously, it wasn't hard for him to find another buyer, so it was just a great property and a great location.
What project now are you excited about? You have any projects on the horizon?
Yeah, about a month or so ago, I came across this deal in Georgia. It's still kind of in negotiation, but it's I got 3 vacant lots right next to each other, right on the side of a lake, and I'm thinking the value of all 3 of them combined is somewhere between $100,000 and $120,000. And the price we're talking right now is $15,000. So,
wow,
that seems cheap. The $120,000 for 3 lots, that seems cheap.
Is the infrastructure built up on the property? There are roads and everything in there.
Yep, yeah. There's roads and utilities, and awesome. And actually, you could totally be right, Jake. It's and that's actually something that I try to do is just be really conservative with estimated value. And another thing about land is like it can be very, very challenging to truly understand what the market value is because it's very different from houses in terms of like there's not very good comps or sales data out there. So it can be very tricky to figure out, a reliable number. But as long as you kind of err on the side of caution and you get it for way below that, it's pretty hard to get burned.
Seth, wow, I've gotten so much out of this podcast. I'm definitely a Seth Williams fan right now. Even from the beginning, you were talking about when you started out, you couldn't find a deal. I think so many of us go through that. I know Gino and I struggled with the same thing. We were looking at deals. None of the numbers work. We want to base our offers on actuals, and we just couldn't find anything. And that's where so many people just quit. But you basically did a U-turn and said, I'm going to find out, where I can go and not compete. And you found land, and you're crushing it. So I'm so thrilled and I'm excited to learn more about your strategy. The other thing is that we've been talking about it. I want to buy some land, so we got to hook up after this. Maybe I'll give you a call and you can help me find 40 acres here in Tennessee or something.
Yeah, man, for sure. Anytime, just let me know.
and I guess the other takeaway is it's just the motivated sellers. It's so true. It's after you get into the game, whether it's multifamily land, whatever it is, to find the deal, you got to find the motivated sellers, and that's where you're going to really win. So I'm just I'm so excited about this conversation, and you've opened my eyes so much. So just great podcast. Appreciate your time.
Yeah, thanks for having me. It's great talking to you guys.
Seth, how can people reach you? Where can they find you?
Yeah, probably the best way is to check out the blog, which is retipster.com. And I've got just a little contact button up on the navigation menu. You can click on that, and yeah, if you got to get a hold of me, that's probably the best way.
Guys, check out his blog. I've been on his blog. His blog is awesome. He's got fantastic articles. It's really chock full of great information and a lot of stuff on there. So I think you guys should all go and check it out.
Thanks.
All right. Seth, have a good one. Thank you so much.
You bet. Thanks guys.
Seth.
Yep.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.